Here we go. Okay, hi everybody, and welcome to another episode of Happy Life with Maria podcast. Today we have an amazing guest, Stephen Mandracchia from Arizona, who is a personal financial planner, a very good one, and
Mm, thank you.
also is very good at tax.
Yes.
And I'm very excited to welcome him to the podcast. Welcome, Stephen.
Thanks, Maria. Thanks for having me. Very excited. A lot to talk about.
Yeah, absolutely. So usually I like to start a little bit about the person's background. So if you could
Yeah.
please tell us a little bit about yourself.
Oh man, I don't know how far to go back. I have a long story, a very interesting story.
We want to hear it.
It's not a finance background.
That's good.
I
That's good.
I grew up in Mexico, so a lot of people don't know that. I was a missionary kid,
Wow.
and I grew up in Mexico, and I went to school there for about 8 years. So I did K through, I don't know, like freshman year in high school, basically. So I learned Spanish, right? So that's was my main language. And then grew up in the state of Michoacan. And if a lot of your listeners or you don't know what the state of Michoacan is, it's known for being probably one of the number one or number two states for drugs in the cartel.
Oh,
So when I think I was like around, maybe 14 or 15 years old, things started to get a little bad in my little hometown. And my mom and dad were like, yeah, we don't want, this white looking kid, here. My dad's American. And they're like, maybe this American kid has a lot of money. We're going to kidnap him for money. And my mother was like, no, we got to get out of this state. So we left, and I moved to Tempe, Arizona in 2011. And I've been in the US since. But it was a great experience. It was a great experience to learn Spanish, learn another culture. You lived in a third world country, you come to the US, it's like, wow, we have like, there's so much privilege here. There's like so much money everywhere. Everyone's making so much money. And it was just a great perspective on life. And then I went to school to be a teacher. I wanted to teach Spanish because I was like, I already know Spanish. I can just teach it, right? And I didn't like the education system whatsoever. I thought it was very flawed. And I switched over to finance. And I've been working in wealth management since. I got my CFP, my certified financial planner, a few years ago. And I got my EA, my enrolled agent. And I really liked the tax part of things. I just loved the complexity of tax. And, I think we'll talk about this later, but I think there's a great opportunity in the tax world right now where a lot of these CPAs are retiring and they need new young people to do returns and to do tax planning. So I really enjoyed it. And about a few months ago, I realized that I want to start my own company. And I pulled the trigger. And so far, it's been really good. So that's a little bit about myself.
amazing. I
Yeah.
love it. Well, that was a surprise.
Not that many
Well,
people know that.
thank you for sharing. So you grew up in Mexico.
I grew up in Mexico. Yeah. In the state of Michoacan.
That is wild. So
Ujú.
you speak Spanish then? Your first
Muy
language is
bien, sí.
Spanish?
Hablo español muy bien,
Oh
sí.
my God, I'm obsessed with Spanish. I always wanted to learn. I understand like a little bit of Spanish because
Ujú.
I'm into salsa dancing and there's a lot of Spanish songs.
Salsa's amazing. I would wish I could dance salsa. It's great.
I'm obsessed with it. If you
Yeah,
have classes, take it. It's
yeah,
amazing. But
yeah,
everything is in Spanish and all my classmates are in Spanish. So I'm
yeah.
picking it up just by being in their circle.
Right, right.
But
Yeah,
I'm
great.
not but I'm not fluent in it. But yeah, but it's so fun. I
Yeah,
definitely wanna learn Spanish eventually. We're gonna practice Spanish later
yeah,
together.
yeah. Isn't your last name is it Hispanic, Colin?
No, no. My background is Russian. My first language is
Oh
Russian. I speak Russian.
wow.
Yeah, I had my first 13, 14 years of existence only Russian, and then we came here,
Wow.
and I had to learn English from scratch in high school.
Okay, so we're kind of like similar, like what was it called back in high school? ESL? or
Yeah, I had to take
I had
ESL.
to take ESL too. I was so
Y-
bad at English. I was so bad at it. And
Yeah.
but yeah, hey, here we
I
are. We're doing okay, right?
yeah, no, that's so funny with the same background. We just find this out right now.
I know. That's so funny.
Awesome, awesome. Welcome to America.
Thank you. Thank you. I like it.
Okay, thank you. So you mentioned that you were actually even considering being a teacher.
I did. Yeah.
Was that because you love interacting with people? What was it about it that you really liked?
I was 18 at the time going into school, and as most 18-year-olds, we have no clue what we want to do in life. So my grandfather was a teacher for 38 years, and I'm like, well, my
Wow.
grandpa did it, and he had 5 kids and he lived okay. So that was my thought process. And I spoke Spanish fluently, and I aced all my Spanish exams in college, obviously, right? And I'm like, well, why don't I just do this as a career? And I think I went into it, Maria, because I was already skilled in the language, and I also really enjoyed like talking with kids and like helping them and coaching. I'm like, this is like a perfect fit. But then I got into it and it was like horrible. Like teachers make like no money. Like if you look at teachers right now, like they just can't survive. They're like professionals with 4-year degrees and sometimes master degrees. And still they just can't like afford their apartment or their rent. And I'm like, I can't afford to support a family on this salary. So that's when I'm like, okay, what is the
Yeah.
next thing that makes the most amount of money? I'm like, okay, finance. That's what I
And you
did.
actually enjoy it, and you're
And I really
actually
enjoy
good
it.
at it.
Yeah, it's great. There's a lot of strategy behind finance, especially what I do. It's less accounting, it's more strategy. So I think it was just a perfect fit for me, and yeah, I absolutely love it.
You know what's funny? Thanks for sharing because that was my dream. I always wanted to be a teacher because
Mhm.
my mom was a teacher and she was an amazing teacher. Well, she
Yeah.
passed away now, but
Mhm.
she was one of the best, like skilled, like everybody
Yeah.
loved her classes were like the holiday to go to because she would make it so entertaining, so fun. And she was just the English teacher. It was like
Yeah.
a foreign language in Russia, foreign language. It was
Yeah. Yeah.
English.
Yeah.
And so I was like, I'm gonna be a teacher because I was always in the blackboard writing, helping her. I was like, even me and my brother, we would be substitute teachers for her when she came here to the U.S. So we would like cover her classes, and I was like, I love this. I'm gonna do this. And my mom was like, No, you're not, because in the U.S. it is a very different school system
Very different.
than
Very.
it is back in Russia.
I
So
know.
pick something else. And
Make something else that makes money. I love our older generation, like our parents, maybe our grandparents, that they didn't like go into their careers like, oh, what am I passionate about? They're just like, what makes the most amount of money that is going to be able to provide for my family? And I feel like now in our day and age, like with millennials and maybe Gen X or Gen Zers, it's like, well, what are you passionate about? And it's just so funny how our parents thought about work so differently than how we think about work, right? But yeah, I think I kind of embraced like my parents' view or maybe my grandparents' view. I'm like, okay, what can I do that I enjoy that's gonna make money, right?
yeah, you have to look at both. I feel
Right.
like that's important because, I enjoy dancing, right? But I don't want to make a career out of dancing. Like, I just do it on the side for fun.
Yeah, of course.
So if I'm gonna make a career out of something, it does number one have to be something that I enjoy, obviously. So if I hate it, that's not a
Yeah,
good place to go. But
right.
like you said, you look good with numbers, you enjoy tax, so I think
Mhm.
it was a perfect fit because it's something that everybody needs and you're good at it. So
Yeah,
definitely I feel like I agree with you. Like if you're picking something, you do have to look at how much money is it going to bring you in and what kind of lifestyle do you want to live. Like some
right.
people are okay with very low lifestyle, then it's
Hmm.
right for you, but
Yeah.
ask yourself like what is the level that you want to
Hmm.
experience here, because we only have a little bit of time here on the planet Earth. So
We all have expiration dates, Maria,
you know
sooner than
so
others, so we have to
make
figure out.
Yeah, make sure that you're living the life that you want to live. And even if later you want to change your mind, you can change your mind. Like, let's say, I mean, also I started in accounting, got my
Yeah.
MBA, I do like more fractional CFO, like
Hmm.
all that stuff. But I also have a passion for life coaching. I'm into, personal development, which is, I guess, the teaching part of me
Yeah.
still wants to do that part.
Yeah. Yeah.
So I do half of my time, I do, the fractional CFO and accounting stuff, and then half of my time do life coaching so
Hmm.
that I can have more than one thing. You can still do more than one thing if as long as it's something that you want to experience. So I
Yeah.
feel like never think that just because you pick one thing, that's the only thing you're supposed to do
Yeah.
forever.
Yeah, and I think you're in an industry, and I think I'm also in an industry where we can work remotely. And if people who are listening to this who are interested in maybe becoming a bookkeeper or a fractional CFO or tax pro, is that you can work fully remotely. You don't need to go into your 9 to 5 with your buttoned up shirt and your black shoes. Like you can create your own practice, and there's a lot of people who create lifestyle practices where they only work 20 to 30 hours a week because that's what they want, and they don't care about the upside so much. They want to focus on having a good work life balance and spending time with their family. And I think this is we're in the year that we can do that. We can have a lifestyle practice. I don't know if I want to do that, but maybe not in the beginning, but some people, can do that. They can work 20 hours a week and still make, a decent living. So
I like
there's,
that. That's a good point. Yeah, because I think the old way of thinking was accounting or tax or all this finance stuff is you have to be in corporate, you have to work
Mhm.
gazillion hours,
Yeah,
you have to be miserable and just
yeah,
put your head down.
yeah,
And like you mentioned, because of the internet and because of the availability of Zoom calls or whatever you want, the
yeah,
software that is available remotely, people can choose to
yeah,
live it differently, to work at it differently, which is, I think, what you're bringing up, which is a good way to start talking about finance stuff. Now
yeah.
that
Let's
we're
do it.
going into now we're
Let's
going
do
into the real stuff.
it. Let's do it.
So number one, I think this is a really good tip to start. Number one, it does not have to be the same old boring corporate. There are other ways to
Yeah.
do it.
And I've met so many people. I think I've interviewed probably 30 to 40 different bookkeepers and fractional CFOs. And just by like messaging them on LinkedIn, and, they post on my comments and I post on theirs. And I know I'm crazy. I met like 40 people in the last month, which is crazy.
Amazing, amazing.
But I think there's like a lot of good things that we can help each other out. And anyways, my point is that when I was talking with them, a lot of them, they were transitioning from corporate jobs to their own company. And especially for bookkeepers and accountants, like you guys are in such a great industry where you can work full time and start your company on the side. I think it's probably one of the only industries where you can do that without a lot of regulatory risk. Like I have a friend of mine who is working an accounting job 9 to 5, and then she's starting her bookkeeping company on the side. And I'm like, do you have any like contractual, like non-solicits, non-compete? She's like, no, not really, not at all. So it's just
Mm,
you guys are in such a great industry. Whereas with me, I'm in the
mhm.
financial services, right? Like I'm a
Okay.
CFP.
Yes.
I cannot work for another competitor.
Oh, do they
And
make
this
you sign
they
stuff?
make me sign. I have to, according to the SEC rules, is if I am working for, Jan Doe financial planners or investment advisors, and Stephen Mandracchia decides to start his lemonade stand, right, with my son, with my 3-year-old son, and I start making money from that on a weekly basis, I have to disclose all the money I make.
Oh,
I have to
wow.
disclose the money I make. So if I make $20 making, lemonade, I have to disclose that. Now, obviously, do everyone discloses everything? Probably not. But there's that specific regulation that I have to disclose what I do. So there is a huge barrier to entry for those in my industry.
Wow.
And it's not as easy as like, hey, I do a little bit of bookkeeping, on the side. And then you slowly start to build your book and maybe have 5, then you get 10. You're like, oh, shoot, like maybe I'm starting to replace my income here pretty soon. And then it comes to a point where you're like, okay, I can pull the trigger and I can sustain myself with my business, right? We don't have that. We have to go from making money to zero and then building it up, right? So I think it's just an encouraging thing for all your listeners and maybe the bookkeepers out there that you guys don't have it that bad. Like, take advantage of that. If you've always wanted to start your own company, do it. Like, you're in a great industry where you can do that. It's not so much the same for us and maybe the tax
Wow.
professionals. They probably have some stuff there too, but um anyways, that's just my
So
advice.
wait, yeah, thanks for sharing that. I didn't know
Yeah.
that part at all, that they have like the what is the non-compete or something, or disclosure that you have to provide.
It's called
Um,
OBA, outside business activity.
oh, outside business. So let's say if you are, trying to do your own personal financial planning,
Mhm,
but you
mhm.
also do tax, you cannot work for a tax company either, because then you still would have to.
Yeah, you would have to disclose that. So if you work for a financial planner and then you say, hey, on the side, I'm working as a tax professional,
You cannot do
they might be okay with that because there's not a lot of conflict of interest. But my point is that you still have to disclose that
that.
to
Mhm.
the owner of the company. So
Oh.
he's going to be like, well, Steven, you're spending how many hours at this tax place? It's like, I don't know, maybe 10 hours. It's like, well, are you sure you can keep up with your day-to-day job? And then, when you're up for promotion, are they going to promote you or someone else who doesn't have any outside business activity? You know what I mean? So it just
Mm.
becomes kind of political too. And also, it's none of your business what I do outside of work. I'm
Yeah, that
sorry.
shouldn't be something the
It's none
boss
of your
needs to know.
business. Like, if I want to start a lemonade stand, why do I have to disclose that?
Yeah, that's
So
weird.
I've really gone down the rabbit hole there, and I have some solutions for it, but at the end of the
Yeah,
day, that's
yeah.
that's what the law is. And
Okay, okay. So
anyways,
that's fine. So you made a choice to start your own, was it called Tulip Financial Planning?
Tulip
Tell us a
Financial
little
Planning.
bit about Tulip
Yeah.
Financial Planning.
So
And
Tulip Financial Planning is right now I am focused on financial planning and tax advisory for business owners.
nice.
That's really my passion. I love working with business owners. I used
Yes.
to work with retirees, and retirees are great in their own way, but I wanted to work with clients that had a little bit more complexity and that I could add a little bit more value to them. And business owners, as you know, Maria, have a lot of things
Yes.
going on. They're very complex and they're very busy, but they really appreciate people who can help them. And I've loved working with them. I worked with business owners at my previous 2 jobs, and I absolutely loved it. So I do a lot of financial planning and tax advisory. So tax advisory, for those who don't know, just means trying to find ways to reduce their tax bill, trying to save them money, and trying to be proactive with their tax situation. So that's number one. And then number two is I'm also building a tax prep segment of my business. So I'm going to do a lot of 1040s, a lot of personal returns, a lot of business returns. So I'm really going to embrace the whole tax preparation. I think there's a huge market for that. There's a lot of people who are retiring, and I'm going to be that person that responds to people's emails. I know that sounds crazy.
Yeah, that's the
And
number one people complain about, that they can never get a hold of their tax person.
I know, isn't that so funny? Someone told me, and this is so true, that they said, Stephen, if you start your own company and you answer your emails and you answer your phone calls, you're already above 95% of the competition. And I'm like,
Yeah.
there's no way it's that bad. And he's like, dude, it's bad. So I'm like, all right, whatever. So anyways, I started the company. And one of my clients, it's a funny story. I did all of these like fancy, strategies, and I did the home office deduction, and we did the auto and all of this. So I presented this to them like very elaborately. And I'm like, yeah, guys, I'm basically going to pay for myself. And I thought that my strategies were going to like wow the clients. So anyways, like a couple weeks go by and the person who referred the clients to me says, "Hey dude, they love you. Like they absolutely love you." And I'm like, "Okay, well, why?" He's like, "Because you're so responsive." And I'm like, "Really? That's it?" Like I just had to respond to emails. Like they didn't really like
Oh,
care so much about like all these fancy stuff that I was like building for them. They were just like, "No, like Steven's great. Like he just like he answers his texts and like he's just very responsive." And now like
oh
it
my.
finally clicked to me. I'm like, "Oh, so this is what he was referring to." Like my friend who told me about that. So yeah, anyways,
Yeah.
that's how
No,
bad
no.
our industry is.
I agree because one of the clients I have now, I do like the monthly QuickBooks bookkeeping for
Mhm.
her, and I took it over from someone else that
Yeah.
she didn't like. And one of the things she's very appreciative about me is I reply, and the other one she could never reach. I was like, "How do you work together?
I
She
don't
can never reach."
understand that concept. Like, imagine paying your employee. Imagine you have an employee and then you reach out to them and your employee like just never talks to you. It's like I see professionals almost as an extension of the business, right? Because they're like your partners, right? They're almost like fractional employees if you think about it. Imagine having an employee and you hire them and they just don't respond to you. I'm like, you're gonna fire those employees. Like you need someone who's gonna be responsive. So I never understood that. Maybe because I've been an employee my whole life. But yeah, it's so accurate, Maria. They just there seems that customer
Yeah.
service is just not part of businesses nowadays.
Yeah, and I think also because for tax and accounting professionals, maybe because not all of them are as social as you and I are, so they're not very good at like communicating. But still, I think if you're providing a service, like let's make this official tip number one. If you're
Yeah.
providing a service,
Yeah.
it is very important that you are reachable and you can respond via email. You don't have to be on a phone call every day, but at least an
Yeah.
email response
Number
is the
one,
minimum.
minimum. Yeah. Rule number one for starting your own practice is be reliable. Like that's it. Like answer your emails in a timely manner within 24 hours. Give people callbacks. And, you know, if you can't reach, like, if someone sends you an email and it's like very long and you like, I can't answer this, like, this is too much. You just tell the client, hey, got the email. Thanks. I'll check it out this week. Give me some time to research. I'll
Ooh,
talk to you.
good
Bye.
one. Yes.
Yeah. Yeah. It's like, it's, that's what my previous boss like drilled into us. It's like, hey, if you're not going to be able to answer everything, just acknowledge that you got it. Tell them that, hey, I need a few days, by Friday. Let me get you back by Friday and with an answer, right? It's just those little small things that you do for people that it just shows that you're reliable, So
I love it. Yes, yes, absolutely. That's a good tip. Even if you don't have the answer, it doesn't mean you get to ignore them for a week. All
yeah.
you have to do is,
Hey, got
all you
the
have to
email.
do is,
Let me get
I
back to
got
you.
the email. I will research or I'll work on it and I
Yeah.
will let you know in a few days. Like just so you acknowledging their existence that you
I
did
know.
get the email.
I know because all the time, like people would reach out to other professionals, tax professionals, and they just don't respond for like a whole week. And they're like, yeah, I know I got it, but like I'm busy. I'm like, well, can't you just tell them that you're busy
You're
or that
working
you can't
on
get
it.
back to it? You're working on it. Anyways, it's such an easy tip to implement and it's such a high ROI tip. So
Yes, yes, I love it. I love it. This is like perfect because it sounds simple, but
Mhm.
this is literally what makes or breaks the relationship
Yeah,
because if
absolutely.
they have no communication, which is like in any regular relationship, if there is no communication, there's no way to reach someone. It
Exactly.
becomes very difficult to have a working relationship because you're establishing a working relationship, that trust, like you were saying.
Yeah.
And the way that you treat the client is what they will, think of you as.
Yeah.
So
Yeah,
make
exactly.
sure that you are doing a good job. Okay, the next
Yeah.
question, I have some questions written down.
Mhm.
The next question I have is um, as a financial planner, let's say that
Mhm.
part of you are
Yep. Mhm.
feel because you do many things. Let's say as a financial planner, personal financial planner
Yeah.
to small business owners,
Mhm.
what would be, let's say, like one or two tips that you would want to share for them when they are
Y-
thinking about their
Yeah.
financial future?
Man, that's a big one. Um, I can think of like, 10, but there's maybe 2 to 3 that every business owner needs to think about. And
Okay.
it really depends on the type of business owner and what you do and what type of company you run. Have employees, you not have employees, are you solopreneur?
So let's
Um,
say they're a solopreneur and they have like a couple of contractors.
have a couple of contractors. So there's things that you need to start thinking about. And it depends on how much money you're starting to make. I think there's like, maybe 3 or 4 growth stages of a business owner, like the ones that are starting out the first couple years, the ones that are starting to make like a living off of this once they start netting around 100K, and those that are starting to scale, maybe they're starting to make 250, half a million a year, versus
Hmm.
those that are starting in the, the millions, the 2 millions. Those are different growth stages, and each growth stage has different sort of strategies attached to that. So
So
if we're
let's say
thinking about,
500,000. Yeah, I'll do
yeah, I was going
500.
to say maybe somewhere, let's look at the average market of a business owner. Maybe they're grossing or netting somewhere between 250 and a half a million. Things start to get a little messy there,
Mm.
right? And I would say the first thing you need to do, and this is someone who is not an accountant, is that you
Yeah.
need to have clean books. And I
Yes.
push this onto all of my clients. And I think that's why a lot of bookkeepers like me, is because I push this. I'm like, I
Because
cannot, it's so crucial. It's like, I
it's
can't do projections. I can't do tax planning. Frankly, you have no clue how much money you're making unless you have clean books. And it's a necessary, I always say it's an investment, it's not an expense. Because I know that if you don't do books, you will lose money on expenses that you never knew were expenses, or categories that you're categorizing wrong. Um, and you're just spending too much time trying to do your own books. It's like, God, dude, just spend the $300 to $500 a month. You're making enough money to justify that expense. Okay. So shout out to you guys. You need clean
yes.
books.
No, no,
Okay.
but let's take a minute for that because literally people do not understand the
They don't.
value of
Yeah.
having clean books. But
Yeah.
we know, talking for somebody like you who does the tax part, who does the financial planning part, hearing you say, actually the first step you should be working on is getting the books, is
Yeah.
making them think that, wait a minute, maybe I need to look into that because that kind of drives everything. Like you said, they don't have any idea what their expenses are, what their categories are,
Yeah.
what their income really is.
Yep.
Is it an asset? Is it a liability? Is it a member's equity? Like, just because you received cash, it doesn't mean anything. Or maybe you're looking at your bank account and you spent all the cash and you're like, where did it all go? And
All the
and you have
time.
no idea because you think you're making money, but there's nothing in the bank. So,
Yeah.
I think that's like a very crucial, I think, thing to remind
Mm.
business owners. The first step, foundation to even financial planning, tax planning, is actually investing in the clean books. Like you said, it's not an expense, it's an asset because
Yeah.
it will help you. Like, I'll share a small story. I took over another client. I seem to be taking over stuff from people. I took over another client who had somebody do their books who didn't really know what they were doing. And
Yeah.
I get in and I look at the prior year because I had to tie up the prior year before starting the new year and like give the numbers to the tax person. And I opened the bank statement for January and it doesn't match the cash they have in QuickBooks. It's off by like hundreds of thousands of dollars. And I'm like, so how did your bookkeeper do the books when the bank statement balance doesn't even match to the books? And I had to go back to the whole year and fix it. And there were things that were like the deposits were recorded twice and the expenses were not even anywhere near where they should have been. And so, I mean, like that literally could have cost them like hundreds and thousands of dollars in taxes if that's the books they would have used to prepare the tax return because they had overstated their revenue, had doubled the deposits.
Mhm. Yeah.
they
It's
had,
Yeah, it's an absolute mess, and I know where you're coming from, Maria, because there is at some point where I asked myself, I said, Stephen, there's so many requests from my clients that I'm getting if I do books, and I asked myself, I'm like, am I at a point in my life where I should just pick this up because I can't do it, like I can't do all the work without clean books, and I'm like,
No,
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 that's not
no,
my
no. You just partner with somebody like me. I'll
yeah,
get it
yeah,
done.
exactly. No, 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 don't do it.
Don't do that part. Yeah, the same thing with me. Like, I don't want to do tax
Yeah,
because as much as people need it, that's just not something that I enjoy doing. So I rather
I
partner
don't
with
do that.
somebody like you or somebody who actually enjoys it or is good at it and push that off so I can focus on.
Yeah,
But yeah, but I think that is number one. That's a very good tip
yeah,
to to start with financial planning and tax planning is go back to the basics and make sure the books are correct, meaning that your books actually match the bank statement, please. Number
yeah.
one,
All the time.
at least.
I can think of just easy bunch of scenarios where I think these clients are making close to 1.5 million a year in gross revenue. Okay, and they still have the same person that prepared their tax returns when they just started the company. This
Mm,
was like their old friend, that's like, on their way out of, to retirement. And they reconcile their books once a year. And I'm like, guys,
that's
you don't know how,
scary.
do you know how much money you're making on a month-to-month basis? They're like, no, like we kind of have an idea. And I was like, guys, spend the $500 a month. Like, just do it. Like, you're gonna be so much more happy on how much money you're making every month. Um, and also, I can't do all my strategies without it. Like, I don't know how much money you're making. How am I supposed to project X amount of money in net income if you guys don't even know how much money you have? You don't even know how much money you're making. So, anyways, we got
Yes,
her fixed
yes.
up. She's good. But I think anyways, going back,
Okay, yeah. So the first tip, get the basic correct. Get the books.
basic, and I think this starts to make sense once I mean, you probably can give more advice to this, but like once you're starting to make real money and those transactions are starting to pile up every month, I say just talk to the bookkeeper, see how much they can quote you, and get your books in order. Tip number one. Tip number two is that once you have your bookkeeper, you have your books in order, then we can start making projections. We can start making some assumptions for your net income. I think one of the biggest mistakes or the biggest
Yes,
missed
mistake.
opportunity is the home office deduction. It's like the IRS basically just gives you the home office deduction on like on a plate. It's
Silver
like, here
platter.
you go. Oh yeah, silver platter, right? That's my Mexican in me. I don't know the English terminology. Just kidding.
I learned that word. Yes.
They offer it to you, and it's like, hey, you can take the actual method or you can take the simplified method. And I heard a CPA said that you can't take the home office deduction if you have an S corporation, and that's just completely wrong. Like, you use accountable plan, which an accountable plan, for those who don't know, allows you to take some business expenses as personal expenses, which being the home office is one of them. So if you're, for example, a counselor or a coach, a content creator, and you use your office for business purposes, there's a formula for you to use the home office deduction to reduce your taxes. And it's one of the most simple ones that it's missed all the time. You would think that business owners that make a lot of money would take advantage of it, but there's most of them miss it, right? So
Wow.
that would be one of the strategies as well. There's the auto deduction as well. I just have a client right now that he's making a lot of money and he's not deducting his auto at all,
Oh my gosh.
even though he uses his car all the time for business. So there's I would say those are probably the three biggest ones that people don't
Yeah.
take advantage of. Obviously the S corporation, once you start making some money, you want to look at maybe does it make sense to make the S election, right? So you can save on self-employment taxes. So I can go on and on all the strategies, but I would
But
say, for the
Yes.
first 3 or 4, I would say, get your books in order, leverage the home office deduction. If you use your car for business purposes, deduct that as well. And then if you start making over $50 to $100,000 in net income, talk to your tax professional to see if it makes sense to do the S corp or S election.
Yes, speaking of S corp election, I was gonna say, because a lot of people make that biggest question to their tax accountant, like, is it better to do an LLC or an S corp? Like, do you have any opinions on that, or you don't care which way they go?
There's a big misunderstanding with LLCs and S corporations. So you can still be an S corp and an LLC. The
Mm-hmm.
LLC is just the entity at the state level, right? So you can open an LLC. I mean, everyone should probably be an LLC, depending on the state.
In
I'm
the
not an expert.
beginning, yeah, in the beginning,
Yeah,
it should be an LLC.
which the LLC, the default setting for tax purposes is a Schedule C, which is just a sole proprietor, right?
Mm-hmm.
Once you start making significant money, and I think significant means around 50 to 100,000 in net income, right? After you pay all your expenses, that's when it starts to make sense. The math starts to make sense on, hey, I can save myself $5,000 to $10,000 a year on self-employment taxes, right? Um, Now you need to be aware that if you make the S election and you're an S corporation, you have to have clean books. You have to have a balance sheet. So you can't do all your shenanigans in QuickBooks and think that your CPA or your tax professional is going to be able to prepare your returns. They're going to be like, hey, where's your balance sheet? I don't know what's going on here. So you need to have clean books, and you
Yeah.
need to obviously pay for the business return, which is a little bit more money. So once you factor in all those expenses and you say, okay, well, my expenses are $2,000 a year, but I'm saving five. Well, it makes sense. So there you go.
Yes.
That's the basic
Yes. Yes.
thought process on the S election.
That's the basic process of the selection. Thank you so much. Yeah, I think just a disclaimer: talk to your tax professional when you do think about which entity you want to
Exactly.
get. Don't do that by yourself. Talk to a tax professional and let them give you the pros and cons of what's right for you, what income level you are, what's your
Right.
structure, are you a partnership, are you by yourself, like
Mm-hmm.
what you want to get to see in the future. But yeah, but thank you so much. How about
Mm-hmm.
let's say they have a family, like you said, you have
Yeah.
kids.
Yep.
Is that something they should think about as well when they set up an
Yeah.
entity? Like,
Absolutely. I have a client right now that has 3 boys, and we're considering doing kids on payroll. Before I even talk about the strategy, I want to preface by saying that this is probably like the TikTok. Everyone has heard of this on TikTok, where just add your kids on payroll, pay them the max amount, and put it in a Roth IRA. It's like, okay, well, there's there's a lot more to that than just paying your kids the max amount of money just to avoid the taxes and then put it in a Roth IRA. So when you hire your kids, you need a legitimate reason to hire your kids. They just can't pay your kid $15,000 a year to do 1 hour of work a week. It's just not going to fly. If the IRS audits you, they're going to ask for, okay, what is the job description? And can you show me a log of all their hours worked? So when we help clients put their kids on payroll, we need to make sure, okay, well, what specific job are the kids going to do? Are they going to clean your office? Are they going to help you with marketing? Are they going to help you with data entry? We need to have a specific role for the kid and a specific market value attached to that job. So if the kid's
hold
going
on.
to,
So is there a specific age they need to be? Like, they can't be like 5 years old, right?
they can be any years old, but the question comes down to, form over substance. Like, if the kid's 5 years old, realistically, what can the kid do at 5 years old? Right? Maybe they can do a little bit of, people always say the modeling thing. They make fun of, well, I'm taking pictures of my kid and I'm putting it on my website. It's like, okay, well, probably not worth $15,000 a year. Maybe you pay your kid $500 a year, right? That's a little bit more reasonable. I think if you're sitting across, you always have to look at it through the lens. If you're sitting across the table of an IRS agent, can you tell them with a straight face, yeah, I paid my 5-year-old $15,000? It's like, I don't think that's going to fly, right? I don't think that's reasonable. But if you say,
That's
yeah, I
true.
paid my kid, $250, $500 for XYZ, it's hard to fight that, right? So I think you just need to be reasonable with it. And just
Mm.
like anything else in tax, there's a lot of gray areas. There's green, there's gray, and then there's red. Let's stay away from the red. And obviously there's always nuance. There's always that gray area. But if we're going to sit in the gray area, let's be reasonable, right? So going back to your question is, we would add the kids on payroll, and this helps the business owner. Instead of paying your kids an allowance, we always tell this, instead of paying your kids an allowance, put them to work, give them a job, log the specific hours, and pay them through the business where it's an expense, right? So you're paying them with pre-tax money versus post-tax money.
Mm.
And once the kid has income, then they have what's called ordinary income or earned income, and then they can
Mhm.
put that money into a Roth IRA.
So for the child, let's say they're like a 10-year-old, they receive, let's say, $2,000 as
Mm-hmm.
income. They
Mm-hmm.
don't pay tax. Oh, they just put it straight to the IRA. So it's like a retirement investment.
So not necessarily, because they're under the standard deduction. So I
Yes.
think in 2025, the single filer's standard deduction is about $15,000. So
Mhm.
essentially, if you are under the standard deduction, essentially you don't have to file. It just depends on the state too. Some
Yeah, the
states
federal, you don't
require
have to
you.
file federal. Yeah.
States might require you to file, so you have to be careful. Some people you can still file, but you might not owe anything. So the whole idea is that if we're under that standard deduction, we don't have to pay federal. You might
Mhm.
still have to pay
Mhm.
state, so you have to research that. But that's
Mhm.
the strategy, is that
So that's why they try to get the kid, because if it's under the standard
Mhm.
deduction, you don't have to do the
Exactly.
federal tax, and you can put it straight to the IRA account,
Mhm.
the retirement account, whatever the retirement account
Yeah, and if they're
is.
on payroll, you can just automatically have your 401 the payroll provider, if it's like QuickBooks or Gusto, you can have them automatically send that to their account at Schwab or
Yeah, yeah,
Fidelity,
yeah.
whatever you
That's
use.
right. That's right. You can say, I want
Yeah.
100% of the salary to go
Yeah.
directly to the IRA account. This is the account number. That's
Yeah.
true. That's true. Oh, I see.
You
I
can be a
see.
control freak. There's some parents that are like, "No, you're not getting anything. It's going all to the Roth. Good luck."
Okay, okay. And then for the business owner, it's a good idea to pay their kids because of what? What are they getting? They have a good expense that it's not.
Well, I don't see. I mean, when I bring this strategy up to all the business owners that I work with, is the tax savings is kind of like the cherry on top. I have 2 kids. I have a 3-year-old son and a 8-month-old
Oh,
daughter.
that's right.
When I do the strategy, I always educate the business owners. I'm like, are you going to save a lot of money doing this? Probably not. Um, but I think the bigger value here is just teaching your kids the value of work.
Mm,
I don't think a lot of
I
kids
like that.
understand the value of making money. So yeah, are you doing a little bit of a tax arbitrage? Yeah, you're probably saving a little bit. Is it going to move the needle a lot? Probably not. But you're teaching your kid the concept of working and the concept of investing, right? 2 things that I didn't learn as a 13-year-old, which I wish I had. So if you're a business owner, you have kids and you can put them to work, which honestly, the US throughout history was built on family businesses, right? Everyone who wants to like poo poo on this strategy, it's like, what do you think people in New York were doing in the early 1900s? They were running family businesses, or the kids were running the business. That's why people had a lot of kids. They had kids so they could have the children help the business or the farm. So when people try to undermine the strategy, I'm like, how do you think America was built on? It was built on family businesses. So I think there is a legitimate way to do this. Obviously, we don't want to abuse the tax law. We want to follow the regulations, but there is a right way to do this, and this will help you save money, but also will help your kids learn the concept of saving and investing.
I love it. Yeah, thanks for sharing. I think it is a very big topic right now. It is all over social media. I do see some posts about it that everybody's like, "Oh, I'm just gonna, do what I want and write down whatever I feel like," and bam.
Yeah, and then you get audited, and oops.
Oops, nobody told me that part.
This TikTok guru didn't mention anything about that.
Yeah, they said it. Go after them.
Yeah, you know
They
what's
give.
funny? I want to say one more thing is that these TikTok tax strategists, most of them don't sign the tax return. That's one thing I want to,
What?
they don't. So a lot of these tax gurus are what's called like tax strategists. They give all these like tax strategies and tax advice, but they won't touch the compliance.
They
So,
don't
don't you
sign.
think that's a little bit of a red flag when you call yourself a tax strategist, but you won't sign the tax return that you advised on? Mm, that's a little sketchy to me because I sign my tax returns for my clients, right? It's my license that's on the line if I am committing fraud.
Yeah,
So, yeah, I
literally.
want to make sure I
Yeah.
save you money, but I'm staying within the limitations, right? I'm following the rules because if I'm audited, if the client's audited, it's my butt on the line essentially. So, anyways, just wanted to
Wow.
make that quick point.
No, yeah, thanks for sharing. I didn't know that all these tax TikTok gurus just give the strategy but don't actually sign the tax
Hmm.
return, because that is a big red flag, because
Yeah.
the way that they are handling it tells you a lot. Because yeah, if you're going to a tax preparer, they
Hmm.
should be signing the tax return. If they're not open
Hmm.
to sign the tax return, that is a huge red flag.
Yeah, no, we don't do that. We'll have another poor soul sign that tax return who doesn't know what they're doing.
Right, right. No, that's just crazy. That's just crazy. Okay, thanks for sharing. And
Yeah.
also, I wanted to know, like, if you have like the stage, and you could let people know about what to kind of think about when planning ahead for their
Mhm.
financial future.
Yeah.
What would you say? Should they have like a savings account, investment
Mhm.
account, a retirement account? What would you say they should
Yeah.
like have?
Oh, that's a great question. And has a lot of answers depending on the person. But I think if we're working with business owners, which that's our really
Yes.
my clientele, is one concept that is missed all the time is that tax planning doesn't happen in April. It
Yes.
happens the year before all the way up to 12/31, right? That's something I have to dig into everyone. And please don't call us on 12/30. It's too late. Like we have to start talking about this now, right? During the summer, let's start talking in October. Once we get into November, December, it starts to get a little too late because we missed all of these, like kids on payroll. We're just going to pay them all out at the end of the year. Maybe, but it's probably best if we added them in summer and gave them a little summer job, right? So one concept is tax planning starts the year before, not in April. If you come to me in April and you're like, "Hey, let's do all these fancy strategies," I'm like, "Dude, you're 6 months late." So talk with your CPA, with your tax professional months before December 31st if you want to reduce your tax liability. That's number one. A couple other tips besides getting your books in order is start looking at specific retirement accounts that are tailored for business owners. So this depends on your specific situation, how much money you're making, and what you want to do. Some business owners are all into putting everything back into the business. Every penny they make, they'll put it back into ads. They'll put it back into employees, contractors, whatever the case may be. And sometimes you want to take little chips off the table every month, every year, and you want to put that into either a specific retirement account. And one of the specific retirement accounts that I really like, if you don't have employees and maybe you have a spouse, is the solo 401k. So unlike the 401k that people probably associate with their 9 to 5 job, is that you can put in the max amount as a solopreneur into the solo 401k, which is about $70,000 a year.
Oh,
Now, you don't need to put the full amount in. You can put in $20,000. You can put in 10. You can put 25. And I think you have to work with your tax pro, your financial planner, and maybe your bookkeeper to figure out how much can I safely put in every month or every year. And I like to follow the 80-20 rule. 80-20 rule is my favorite rule because
mhm.
if you're that type of person that you're like, I want to put everything into my business, I want to grow it, I want to scale it, I want to hire people, I want to go into buying ads. Okay, that's fine. How about 80% of the free cash flow goes back to the business and maybe 20% of it you put into that solo 401k and you buy your favorite stocks or bonds, whatever the case may be. So I think the solo 401k is definitely underused. There's the SEP IRA as well. If you
Yeah,
think
the
the
SEP is
solo
popular. Yeah, SEP is
SEP is very
popular.
popular. If you think the solo is a little too expensive or a little too complex, you can just plop money into a SEP and forget about it. Um, so I would say
Tell
those are
us,
the
tell
really.
us what the SEP is for those who
Oh,
don't
the
know.
SEP IRA. So the SEP IRA is kind of like the solo 401k, but with the SEP, it's specifically an employer contribution. So the solo 401k has an employee portion. So if you've probably heard of people max out your 401k, just means put the $23,000 a year. That's the employee portion. But then there's the match, which is the employer portion. So with the solo 401k, you can put up to 25% of net profits or income. So if you're making 100,000, that would be 25,000, right? So that's the solo 401k. So you have the employee portion of it, and then you have the employer portion of it. With the SEP IRA, unlike the solo, there's only the employer portion. So you can only add 25% of profits or W-2 if you're an S corporation. So let's say, for example, you're an attorney, you're paying yourself $100,000 as reasonable salary. You can put up to 25% of your W-2, which would be $25,000 a year. That would be the calculation. So SEP is a lot more simple. You don't need like a third party administrator. You don't need to
Mm,
file Form 5500.
mm.
There's a little bit less compliance, but honestly, guys, the solo, it's like $500 a year. There's so much flexibility. If you're doing like a killer year, you can like bump it up as much as within limitations. You can bump it up a lot more than the SAP. So yeah, that's the SAP. Sorry, I probably went way too technical
Yeah,
on that.
that's good. That's good to know. I think a lot of people just kind of hear the term but don't really understand what
Yeah,
it is, and then they cannot make a proper decision. But if
yeah,
somebody like you explains there's a solo 401k, there is a SEP IRA, and then
hmm,
they can kind of talk to their financial planner or
yeah,
tax person
yeah,
and get the proper detail before they decide. I'm just gonna schlep this amount in there.
yeah. It unfortunately happens a lot more often than not, where they just tell me, "Hey, this is how much I put in," and I'm like, "Okay, that's fine." But
Yeah, and you do have to be able to afford it, of course. Yeah, you're right. The
yeah,
bookkeeper or the fractional CFO should be able to tell you how much you can actually afford to put
exactly.
in and put away after you cover your regular expenses, so that you're not putting everything into the IRA and you cannot even
Yeah,
cover your expenses. That's
exactly. Make sure you're
definitely,
not cash poor.
yeah, that's definitely important. Thank you for sharing. Let me think. It was another question I was going to ask, but I feel like we covered so much already.
We
Is
did.
there any other tip you wanted to share, or any business strategy you wanted to share that you like to talk about?
Um, not particularly. I would just advise The business owners out there that want, you know, proactive tax planning, that's going to be in all likelihood the future. I think less and less people are moving away from just doing preparation. And I think the new norm is going to be tax advisory, where you have a relationship with your CPA, you have a relationship with a professional, where they talk to you maybe every quarter, maybe they talk to you every month, like the good ones, like me. I talk to you every month. And that's just going to become the norm. I really do believe that there's going to be a new entrance of, hopefully there's going to be a new entrance of a lot of new professionals that are going to do a lot of tax advisory. And I think that's ultimately a good thing for business owners, because the IRS, Maria, takes almost a third of people's money. Imagine working 1/3 of the year for free, just for the government, right? So there has to be ways to reduce that liability. And the good news is there's a lot of ways to do that legally, but it requires a lot of planning and a lot of strategy. So fully embrace
Yes.
it.
I love it. Thank you for sharing, because I think that is absolutely the key factor that differentiates, people who are, let's say, the high earners that are like 1 million and 2 million earners. They know this, and this is like their number one rule
Yeah.
is they have a meeting with their tax strategist, tax professional every quarter, like
Yep.
in April, in the summer, in the fall,
Mhm.
before the next year's taxes are due.
Yep.
Because like I've seen this, because obviously I'm in accounting, I work with tax teams a lot, and I see how they interact and the information that they ask from me, and they literally will decide the year before, because that's when all the cash is moving, is the year before. So the year
Yep.
before is when you can contribute to that IRA. The year before is when you can, well, I mean, you can do it after as well, but it's different. You can pay those salaries, when you can
Yeah.
decide the legal structure. All those money moving things need to happen in the calendar year that you're
Yeah.
filing, and that's the year before.
That's
So
the year before. You said something so important, Maria, is that the business owners that are netting over a 500,000 to 1 million know this already. And it's funny because when you work with those business owners, it's very different than the business owners that are below that. And I think obviously it has to do with experience, but those business owners are like, "Hey, Steven, what do I need to do? Tell me where to move the money. Like what account do I need to open? Oh, so okay, let's do that. Like how much do I need to put in there?" Like they just know, like they have to move money around. Whereas the other business owners are just a little more like, what's the word I'm looking for? Skittish, or like a little bit more wary. Like, ooh, what am I doing here? Like, how much am I putting in this month? Like they're a little just more careful, But I think once you start making more money every year, the government takes a bigger portion, and they're like, okay, I need to start doing some planning in order
before
to
the
get it
year ends.
right. Yeah, and they want
Yeah, I think exactly. Yes, everything that the higher earners know and they're doing is because they have been burned before, because they waited
oh,
till the year end and they was already too late. You cannot do anything with the money. You cannot move the money because the tax year has closed.
yeah. Yep.
You're in a future year.
Mm-hmm.
So there's nothing you can do.
Over.
So absolutely take Stephen's advice that
Yeah.
if you really want real financial planning, real tax strategies, it starts the year before, it starts in advance, so that that year that you are filing the tax return for, you are already ready to go. You already know the steps you need to take. You already can move the money around because it goes by the calendar year that you're filing. So make
Exactly.
sure you invest the time, you invest the financial, because the plus, like, the advantages of it is gonna you're gonna thank yourself later, like,
Yeah.
because you took the time to do that. That's like you were saying about the bookkeeping as an
Yep.
investment. The same thing, the tax strategy is not an expense, it's an investment, it's an asset that
Exactly.
will later, when the tax return time comes, you already did everything, you're already good to go, and you didn't beat yourself up. Oh, why didn't I call you sooner?
Yeah,
Why
all
didn't I ask you before the year ended?
yeah, and I think Maria, I know we're getting close to the end, but I
Yeah.
think business owners see that as like a line item on their expense P&L, and they see our fees are like, oh, I have to pay Maria, $500 a month. It's an expense. But when you combine the accountant or the bookkeeper or the fractional controller, CFO, and you combine that with a tax planner or a good CPA, a financial planner, when you combine those two fees are still a lot less than the monetary value that we're giving you. And I always tell my business owners, if I'm not at least paying for myself, I'm failing, right?
Mm.
Because not only am I going to save you a lot of time, I'm going to save you a lot of money. So when we combine forces, where like, hey, we have a really good accounting team that's keeping everything clean, and then we have a really good planner, and we combine those two, I am very confident that worst case scenario, we're paying for ourselves. Best case scenario is we're giving them 2-3 times whatever they pay us. So,
Absolutely. That's a perfect way to say it. That's a perfect
mhm,
way to say it. It is not an expense, it's an investment.
mhm,
And you will be saving money when you have clarity on your books, you have clarity on your strategy, and you are prepared to
yeah,
handle all the year end stuff that comes your way before the year end starts. And you will be very happy and thankful to yourself for making that investment. Just ask all the millionaire making planners and
yeah,
business owners, because that's what all of them do in
yep,
advance. They know the value of it, they
they
seek
do.
it out, and that's
Mhm,
how they are ahead of everybody else
they
in
are.
the amount of taxes they pay, because
Mhm,
they strategize the year before.
exactly. And they have good bookkeepers too.
And the bookkeepers, yes, very good bookkeepers. That's what it is. Literally, like one of my other jobs, what I used to work in corporate was working with high net worth individuals, like a bunch of
Mhm,
them. And number one thing they all were seeking is number one is the good books, and
mhm,
number two, the tax strategist. That was like a minimum given. They knew exactly the value of it,
yep,
and they didn't even hesitate, like you said, not even for a second. They knew
yep,
how important it is,
mhm,
how much money it's actually saving them.
mhm. Yeah,
And that
you
was
need to
like,
pay money to make money, right? That's the game.
yeah, they
That's
loved
the
it.
game.
Okay, so before we go, I
Mhm.
have this fun little game I play.
Okay.
It's called Question Everything, and these are some fun interview questions, random questions that
Okay.
one of
I'm good
my
at
favorite.
I'm good at it. Let's see.
All right. One of my favorite, I guess, interviewers created this, and I am
Okay.
loving it.
I
So we're just
okay.
gonna randomly ask a question. Ooh, that's a good one. What's the best thing you ever quit?
Oh, my job.
Ah, tell me. What was the reasoning? And
Oh, man. I don't know if I how much I wanna dig into this, but,
on the surface
um,
level.
on a surface level, um, let me preface by saying I've always wanted to start my own company ever since I was
Ah.
younger, and I unfortunately just didn't have the experience to do it when you're younger, and so I kinda worked my whole life knowing that someday I was gonna pull the trigger. So it's really nothing against my employers. I think they were
Hmm.
great. Um, but I think quitting my job at the time, it just wasn't a good fit for me. Just to be honest, it wasn't a good fit, and I think quitting gave me so much like peace of mind.
Oh.
I think I was just like so stressed out. I was like I had anxiety over it, and it just wasn't a good. It just wasn't a good fit for me.
Hmm.
And I think quitting was just kinda like a huge relief, and I'm like, "Okay, like, I quit, like, I'm not dependent on anyone else, I'm dependent on myself, like, I need to make this work." So I was betting on myself, and, I'm 4 months in, and I've been signing up, about one client per month. I've been super blessed in these last 4 months, and this is slow season, Maria. Like, I can't imagine what busy season is going to look like end of year next year. So
Yeah.
I'm super thankful, and I think one of the best decisions was to quit my job below
Wow.
marrying my wife, obviously. So
Obviously, the wife is the best decision, and after that, it's the
yeah,
quitting.
yeah, that was it.
I love it. No, thanks
Yeah,
for sharing that because I
yeah.
do feel that unfortunately, there are a lot of people who are miserable in their jobs and are very afraid to take this step and, the leap of faith. But I think what you're sharing is, you bet on yourself, you trust
Mhm,
yourself. If you know that this is what your future looks like for you, if you know this is the better setup for your
mhm.
personality, for your family, maybe you
Right.
want more flexibility. Don't be afraid to bet on yourself.
Mhm,
And it might look like whatever way it might look like you were saying. And if you are in bookkeeping or tax, you can still
mhm.
work not even full-time, you can do part-time if you want
You can do
and
part-time.
build your business. Um, there's other things you can do while you are building your business, but if having that freedom and
Mhm,
setting your own hours and being your own boss is one of the things that you are dreaming about, I
mhm,
would say, like Steven said, bet on yourself, go for it, at least do your best to give it everything you've got.
mhm.
And the worst case scenario is you can always go back to the corporate job,
You
you
can
can
always
always
get
go
a
back.
job. That's what I tell people is go for it. And what's the worst case scenario? The worst case scenario is that you go get a job and that's it. That's the worst thing that could happen. So why not try it, right? But there's smart ways to do it, Maria. You can start with your 9 to 5 and slowly build your company. You can use Upwork. People don't use Upwork enough. It's like I've gotten like 3 clients from Upwork. It's
Oh,
like it's a great way to find people who need a lot of help. And oh my gosh, if you're a bookkeeper and you're not using Upwork, starting your company, you are losing out on clients because there are so many people on there looking for clean books. Like 1 in 5 posts are about something related to accounting. So that's advice to everyone there. Um, do your 9 to 5, start your company on the side, use Upwork, Fiverr, build a clientele, and then you can pull the trigger. So
yes.
that's my
And
advice.
you might be surprised how amazing it may turn out. You never know.
Mhm. It absolutely will. Yeah, you won't regret it.
Okay, thank you. And the last question,
Yeah, do it.
um, oh, okay, some of these are,
Are they a little raunchy?
yeah, this is a PG podcast. We're gonna skip those kind of questions. Okay, we're gonna choose a different question.
Okay, good. Like Cards Against Humanity or something. If you've ever played that, yeah.
No, what's
Oh
that?
yeah, yeah, it's very rated R. So
Oh,
yeah,
okay. I don't need no.
yeah. Keep it
Okay.
PG.
One thing you're trying to or need to let go of in your life. Okay, so it's kind of similar.
Wow. One thing that I'm trying to let go of in my life right now. Um, I'm trying to let go of control.
Mm,
Um,
yeah.
I think this is probably common for people who are starting their own company is that I'm trying to control everything. I'm trying to plan out what's going to happen next week, what's going to happen next month, how much money I'm going to make by the end of the year. And it is impossible to do it. And one thing that I've learned in being a business owner is that I have to trust, I'm a Christian, I have to trust God. And that's one of the hardest things to do when you don't know if you're going to have a paycheck next month, right? Or next week. So I think letting go and just trying to trust that everything is going to be okay and that I can count the amount of times that things just happen so randomly. where like, oh, this person who knew this person reached out to me and like, oh, here's a client. Like just scenarios where like I would have never thought about happen when you're a business owner. Whereas you're an employee, it just kind of like it doesn't happen that way because you're kind of like you have a paycheck every couple weeks. So there's a different level of trust. So I'm trying to let go of control, Maria. And I think I'm doing
Yes.
better. I'm month 4, month 5 right now. But I need to do better.
Yes. No,
Yeah,
but that's amazing. Thanks for sharing that because I think that is a big issue that a lot of people are
yeah,
struggling with.
yeah,
It's that unknown. It's that, like what's going to happen next month, what's going to happen next week.
yeah,
And I guess, yeah, I would say like knowing that there is a higher power, whichever God you believe in, knowing
yeah,
that there is a higher universal force at play that
yeah,
does kind of watch us and, you know, can create all kinds of miracles for us if we
yeah.
just kind of let go and allow it to be our kind of co-pilot to
Hmm.
work together with it, like so
Hmm.
you're a team together, and you never know what opportunities it may bring you, but the only way that happens is if you let go of control and let the
Man,
other teammate teamplate
I know it's
to
so hard though. It's like, oh, if only I could do things, If only I could do the books, Maria, I'd get everything done. Just kidding.
Awesome, awesome. Well, this was amazing. Thank you so much. So, where can people find you? How they connect you? Is there like a
Yeah,
LinkedIn or a
yeah.
website or email? I
Absolutely,
don't know.
all the above. So LinkedIn is my primary source of, I would say, contact. That's just Stephen Mandracchia, my name. I'm probably the only Stephen Mandracchia on LinkedIn because my name is so weird. And then you can find me on my website. So that is tulipfp as in financialplanning.com. And then if you want to reach out to me via email, that is Stephen at tulipfp.com.
Awesome. We will put all that in the show notes.
Mhm.
But this was amazing. Thank you for taking the
Yeah.
time and sharing your tips. Hopefully, people find this inspirational and do what
Yeah.
they need to do for themselves to get going. But yes, thank you so much for your time. Thank you
Mhm.
everybody for listening, and tune in to next time.
Thanks, Maria. Bye, guys.